Starlink, so Friday, I go outside, burn. Yeah, I'd have to have some sort of like tent, screen, or something. But Friday, about an hour before the market closed, I took off with with two other guys and about 11 to 13 year olds, and we went camping overnight up Payson Canyon. Not Payson, Arizona, Payson, Utah. That's where I grew up. But we went to this place called Pete Windward. I mean, it's okay. We're gonna do 2 nights. We just did one, and so we could have gone up a little bit further, a little bit greener. Gone to Payson Lakes, which is more developed, and instead we went to kind of it's a lot where a lot of people like to go horseback riding. So kind of camp back in there, go horseback riding. I remember going there as a kid. I never knew there was a reservoir as a kid though. But anyway, there's a reservoir right there. Lots of cows, in that area. but it was fun. Lots of big logs. The kids are like taking the big logs out there. I was gonna bring my paddle boards, but I'm like, it's a little bit dirty. Anyway, but I was like, man, could I, do broadcast up here with Starlink? Now I'm looking at Johnny outside. I'm like, dude, I could totally do that. Then we did like a 4.5 mile hike. And we ended at a waterfall. It's called the Grotto. So we started up the mountain, dropped them off, took the car down, and it's about 4.5 miles downhill. And we got some little guys in there, man. They're one of them. He carried this big stick the whole time. It's a chicken foot, and of course I'm taking up the rear, so nobody's gonna get behind me. The other leader's younger. I'm like, dude, you just go ahead because the other kid's like running. So we had another leader in the middle. But I hung back with this little kid. His name's Jacob. He's got not necessarily special needs, but he's a little bit behind the curve a little bit. And but man, he hardly complained, which was amazing. But he carried this big stick. It was taller than him, and it had like 3 prongs on top, like a trident. And he carried that sucker was bigger than his hand. And initially, he was carrying it, and he was complaining just a little bit. I was like, hey, why don't you use it to help yourself not fall? Because it's kind of steep. We're dropping about 1,500 feet down to the waterfall, and anyway, so I convinced him to use it as a walking stick instead of carrying it, and so he uses the walking stick, and it saved him a few times from falling on his butt. So he finally found his lucky stick, and but it held him. He kept going until about the last about 100 yards. He started to kind of stop a little bit, but he's a little guy. I mean, he's shorter than my daughter, who's 8. I mean, but anyway, he did really, really well. Surprised about that. If you ever been horse front riding, it's a real challenge. It's like I could actually probably ride a horse now. As a kid, we had a neighbor down. We had horses all around us. We had a field behind us that had horses, not necessarily taken care of very well. We had horses on the east side of our house. And they bred those horses for racing. And then I had a friend down the street, and back when I was a kid, all the houses went to the middle of the block. So we had square blocks. They went to the middle. And so you had a decent amount of land to grow crops or even have an animal. So they had a couple of horses. And so I remember, so they had Red, and that horse was a little bit wild. And so my friend rode it, and I was probably like 13, and I rode Ginger. Now Ginger is like 20 years old, never ran on anybody. So we drove the horses, we rode to the gas station. Now you may not know this, but here in Utah, gas stations have drive-throughs. So you can drive through and get your soda. Okay. So, or whatever you want. Right. So anyway, so we took the horses and we rode through the drive-through, and we got drinks. And so I got an extra large fruit punch. Big mistake. So anyway, I got this big extra large fruit punch. I'm riding down the road with Ginger, and then Ginger decides to run. Of course, my natural instinct is to squeeze, and I squeeze my fruit punch. It went all over me, and Ginger's going. And my friend on Red, who does run, ran up next to me, got Ginger settled down, and I didn't really ride horses that much. That was probably one of the few times I rode a horse. Yeah. My brother though, I mean, he's a big guy. So he's lost he's lost 40 pounds, like down to about 310 right now, I think. But he's an offensive lineman, and he wanted to go. He had a friend who had a horse, but he can't ride a regular horse. I'm talking rodeo. Now we're talking horses today, but he couldn't ride a regular horse, and so he got a horse that was part Clydesdale, and we call it her name was Pearl. Unfortunately, she got an infection when she was born, and a year old that infection because some of the umbilical cord or something. And horses are fickle creatures, man. It's kind of crazy. But anyway, Ginger passed away at about a year, a little over a year. But he wanted to get into horseback riding, and he had land for it and everything like that. And but unfortunately, Ginger passed away. But yeah, the horse could ride. Well, it's half Clydesdale, so you get half regular horse, half Clydesdale, and it can carry something that's over 300 pounds. So now I might be able to get away with the bigger horse, but we went to the rodeo on Saturday. So in the summer in Utah, rodeo's huge. Maybe not as big as it used to be, but I'll tell you, I mean, my brother-in-law, he's in California, tried to get tickets to the Beatles, Paul McCartney, and his brother-in-law was trying to get tickets, and he was like, got on right away, and he was like 5,000 in line. Well, the rodeo here just south of me in Spanish Fork is pretty big. They got a nice fireworks show. This is on the 24th of July, Pioneer Day here. But man, one of the guys that went up to camping with over the weekend with those kids, he was 1,000. He tried to get tickets, was 1,000 in line to get tickets to rodeo in Spanish Fork. But we went to Santa Quinn, so it's basically just grass berms. They have a few stands in there. But it's nice. It's Rocky Mountain Pro Rodeo Association event, something like that. But the bull riding was pretty good. You get to get the calf roping. My neighbor of mine, he did a little mutton busting. So that's where you put a kid on a sheep and let him go. But I mean, he had his cowboy boots, he had his buckle, his jeans, his shirt. He was ready for bear. Usually they'll take their hat off and set it aside because they don't want it to get to. Wonder if Paul McCartney would probably so. He might have opened for him, right? He might have opened for the pro rodeo. We had a couple of national guys there on the bulls, but yeah, it's a good time. We got a lot of food trucks, so I got the chicken fingers. It was pretty good. Dippin' Dots, So I got some cookies and cream, Dippin' Dots. Anyway, good time though. Good time. Anyway, all right, let's get going. Good time in the market. We're looking at the VIX right now. What we're gonna talk about today. Sorry, that's a little bit long. Well, Johnny made me get on 5 minutes early, so I got to take a little time. I only prepared for 45 minutes, not 49 minutes. Come on. Sorry, I'm a little parched. All right. And my calves are sore. 4.5 miles downhill, you get quads and your calves, a little bit of hamstring action. But anyway, all right. And I'm not top of fitness here either. So we sit down all day. Horse versus Brandon, horse wins. All right, so we got the VIX here. So the VIX is down a bit. So I talked about the idea. So back on the 23rd, we've been waiting for some sort of volatility event. Waiting for some sort of volatility event. Was Friday it? So we have this scenario here. We popped up here on the 23rd above 1.2. Don talked about contango last Monday. Got me all excited. Hey, we're talking contango. I love it. This is my contango indicator. It's not exactly contango, but it's representative of contango. And so when I get that and I see skew above 130, that's my signal for saying, hey, you know what? Where's the 23rd? It's right there. Skew pops to 160. I'm like, you kidding me? Hey, this is a pretty good signal. So the idea is that at that point, I'm expecting a 5 to 10% sell-off in the market from whatever the peak is in the next month. Now, a lot of times those peaks come quickly, okay? Sometimes they don't come at all. But this is a relatively reliable indicator. And the way that I use this is take profits and hedge, and maybe you take a VIX spread. Well, in Ghost Prince, we took a VIX spread. I talked about it here as well. We bought the night. I talked about the 20 and 25, trying to get it for under 70 cents. We took the 19 and 24. And so I had to leave a little bit early on Friday to get up the mountain. So we had time to go to the reservoir and play games that night. But anyway, 11 to 13-year-olds is crazy, and getting them to be quiet. And I mentioned Jacob. He had issues with flashlights around the fire. I'm like, dude, there's a fire. You don't need a flashlight. You're shining at my eyes. me and one of the other leaders over there. Anyway, but it turned out he was in a big tent. We had a 10-man tent, an 8-man tent. So lots of room for him in there. But all night long, he had he had 2 flashlights and a lantern, and my son was in there with him, and he's like, the lights were on all night long. We didn't sleep at all. Okay. So how does this relate to the VIX? I'll try to figure it out. But my point is, on Friday, we had some people posting in chat, should I close it? I mean, this was up like 60%, but my thought is that, look, we're expecting a bigger sell-off here, right? We're expecting a bigger sell-off. We bought a 19, we sold a 24, we paid 60 some odd cents for it, and we want to sell it for $2.25, right? My goal is a 250% return. So if we can buy it for 60 something, if we can sell it for 225, hey, that's a good trade. That's a 250% profit. And so it looked like people were getting a little weak in the knees. And today, obviously, you're like, oh, did I miss it? So we're going to talk about today is, have you missed it? We got the signal for when the 5 to 10% sell-off may happen, triggers a time to maybe buy the spread, triggers maybe when to hedge and to take profits. But we walked through this hedge last week, and I did the update for it on Friday as well. But it's this one right here. Price slices, we'll go to risk profile. But we walked through this hedge, how to hedge $100,000 portfolio. It's 50K blocks of S&P, 1 put and 2 call spreads. So, I mean, again, we're giving up some upside here, but where's the market right now? Live 635. Well, again, we had dipped down here a bit. Did our puts ever go in the money? 621. Yeah, they did. Did we have a chance to really roll on Friday? Not really. And so my question for the market right now is that, yes, we already had the sell signal. We already had the hedge signal. Now, what are we looking for? Any thoughts? So we had the signal to hedge. We had the signal to take profits back here on the 23rd, right there. Now, what are we looking for? What's your response? What are we looking for right now? Now, what are we looking for? And to me, I mean, we're up 1.3%. A bigger horse. All right, we're looking for a bottom. Well, a bigger horse might have a bigger bottom, right? So we're looking for a bottom. And so today's move, we're up 1.3%. I'll tell you, Don and I are going to go over the new Ghost Print scanner on Wednesday. We're going to kind of introduce that to you, and limited time offer with it. And believe me, it is limited. So again, we'll have a chance I'll share that with you on on Wednesday during our special event. But I pulled a number of prints this morning from that, and stuff like Peloton. Sorry, I was trying to bring it up on the side, and I mentioned my computer stopped. But Peloton, it's got earnings coming up this week. Big call option activity in Peloton, in Bros. So the coffee company, Bros. And normally I don't oftentimes look at this stuff like ahead of earnings, but these are higher short interest companies. Bros coming up here in a couple of days. Call option activity again, front week stuff. On the call side right there, 65 strike. We got Peloton again, front week, 14,000 contracts at 750. So what this means is, if the earnings have any inclination, I mean, these might have a chance to pump. So for this week, if I'm looking bullish, I'm looking at a couple of opportunities taking bullish swings on earnings plays. Even a Teladoc kind of looks interesting here. This is when I tried to play a couple times here, missed that pop. We're back down here again. We already had the earnings. We're seeing a shape up again for maybe another short squeeze. But I kind of like the earnings potential, especially for Peloton here. But the idea is that right now, as we look at the market, yeah, we're seeing some bullish, a little bit of bullish fervor today. But here's the problem, though. I mean, Peloton's not grinding. I mean, we're seeing very little volume so far today. If we look at the SPY, not the volume super significant, and really it's not significant at all for ETFs, but I mean, volume, we might get to average volume today. But this is probably not our signal for a bottom. But I'm going to walk through a 4-point process for identifying market bottoms. Skew hits 170, sell SPY. Yeah, so Skew, did it go up or down on Friday? Actually, I don't even know. We actually ticked up on Friday. So amidst the selling, Skew went higher. Today, with the VIX going down, my expectation, Skew's going to go higher. And so as we walk through this 4-point process, and let me see if I still have it over here. Let me switch my gadget to Notepad. Scratchpad, rather. Yeah, I had erased it. Oh, well, whatever. I'm going to walk through these points. The first one is the VIX. Okay. So the VIX, I'm going to bring up what's called the Keltner trend. All we're looking at is a 2 ATR 20-day Keltner channel. So point number one in this process, and let me roll this back over here. Point number one in this process, we want the VIX above the 2 ATR 20-day Keltner. Okay. We actually did get that on Friday. So Friday, notice right there, we did close above the yellow line, which is the 2 ATR 20-day Keltner channel. So point number one, we checked. That's the easiest hurdle. Now, just because you do that doesn't mean you're done, right? Frequently you are, though. Here we closed above it. There we closed above it. There we closed above it. Here we closed above it a couple of times on the way up. Here we closed above. There we closed above there. We had 2 more days above it, but that's pretty significant. For the VIX to get above the VIX to get above the 2 ATR 20 Keltner, it does not come easy. Okay. And so we've been grinding lower here. We finally get back above it today. Or on Friday. So that did trigger. Number two. Number two, we want to see what? We want to see that the SPY or SPX fell greater than 1 ATR. Okay. So why are we looking for this? We need to get a degree of movement in the VIX and a degree of movement in the S&P. So we got to have both. We got to have selling and we got to have movement in the VIX. And for this, I'm actually bring up the SPX. Whichever one you want to use is not a big deal. Okay, so I'm going to go load study. Say here, we're going to go to ATR. I'll just edit studies. ATR, where are you? It's right here. So ATR takes the difference between the high and low, or the previous day's high to the next day's high or low, whichever's greater. Previous day's close, next day's high or low, whichever's greater. So we have like the gap, right? On Friday, the 1 ATR was 56. We're using a 14-day ATR. We closed the previous day at 63.39, and we got to subtract 56 from that. So 53.39 minus 56. Sorry, didn't 53.89. 53.39 minus 56. We needed to close at 52.83 or less, and we did that. So Friday, check number two. SPX fell greater than 1 ATR. Okay, so we saw a degree of price movement selling in the S&P, and we saw a degree of movement in the VIX together. All right, that's a kind of a point of capitulation, right? Is when you get that. Now again, is that the ultimate capitulation? The answer is no, not according to my strategy. And this is something I developed about 20 years ago. Number three, meaning I've used this for about 20 years. I'm looking for VIX backwardation. Okay. Oh, I'll say this. VIX 3M divided by VIX. Oops. Divided by VIX is got to be what? Less than 1. Okay. And number 4 would be VX backwardation. Now, these are somewhat similar things, right? Not exactly the same thing, but pretty dang close. So again, you don't have to have both of these, but I throw them both out there just because. Okay. So let's look at the VIX 3 to VIX ratio. What we're saying is we had the trigger when the 3-month VIX was 20% higher than the 30-day VIX. Well, that's a bearish expectation. The 3-month VIX is higher. We're expecting volatility to rise in the next 30 days. So then we're going VIX. Oops. We got to go plus VIX. And we got to use what's called a pairs ratio study to get a ratio. So on Friday, we got down here to about 1.04. So here's the deal. We did not get to that level, right? We did not achieve the 3-month being less than the VIX. Now, if we go to product depth here, we go /VX, we go curves, and I'm going to add a curve in here. We're going to go back to the first, and we're going to see, did we achieve VIX backwardation on the first? The answer is no, we didn't. Okay. So what's backwardation look like? It looks like this. Okay. And we're like this. So VIX backwardation, 3-month VIX. We did not get the degree of selling that the option market began pricing in an expectation that volatility is going to decline. Okay. So as we look at this today, what does this tell us? Notice what we have here. This is the what? The AUG expiration. That's the SEP expiration. Make sure that's the AUG. And again, sometimes they shift on you and it's not. It's the SEP. That's the SEP and that's the OCT expiration. So right now, we're still expecting volatility increase. Okay? We're still expecting volatility increase. When we flip this way, we're expecting volatility to decrease in the next 30 days. Okay? And so the idea is that we're still in a position where, yes, the VIX is down, but we're expecting volatility increase. And you can see that charted as well, again, by going to the charts over here. And you'll see this is ticked up. We're now at 1.1. Okay? So we went from 1.05 to 1.1. Where do we want this? We want this down here. So our signal for our VIX trade is for that to get below 1. If we get below 1 or we get to 225, that's done, right? Then we're out. We'll take the profits in the VIX. Okay. And so again, those are the 4 points. Now, I got a couple of additional kickers. Okay. One would be the skew index, less than 120. So if we can kind of get in that 115 to 120 range, that would be an extra layer for an indication of a significant market bottom. That means the skew index has got to get down here. Okay. Another kicker is a 90% day. So these are kind of additional criteria. These do not hit as often. But hey, if you see them, they're significant. Okay. So a 90% day is what? So we're going to come up here. We're going to go $DECN plus $ADVN, and we're going to do a pairs ratio. Now, where did this get on Friday? I'm going to go to a 5-day, 5-minute. We'll even look at intraday and see how high we got. Notice up here, we got to about 3.6. Okay, do you see that yellow line right there? Don't care about the composite. All I care about is that when we got to 3.6. What type of breadth did we see in the selling on Friday? So based on this, how much breadth to the selling was there on Friday? Not a whole lot. You only saw about 3.6 times more stocks sold than bought. We almost had a similar day on Wednesday. Okay. There's just not a whole lot of selling that went on Friday. What we saw was a whole lot of hedging. Let's look at volume. No, actually, what do we want to see here? I guess we want to back this out. We want to see a 90% day. What's a 90% day? We can go back and we can see a 90% day right there, right? What day was that? May 21st was a 90% day. Okay, go back further. Right there. What day is that? June 4th. Okay. So on June 4th, we had a 90% selling day. Where's June 4th? It's right there. Okay. So on June 4th, we had a 90% selling day. When you get that, we have already had the sell-off. We had VIX backwardation. Skew didn't go below 120, but right there, you start to really turn bullish. Okay. So the idea is all of my indicators, we want to look, it's called a ghost print. We're looking at something going on in the background that you're not readily seeing. So we saw the potential sell-off here on the 24th, right? We saw the potential sell-off occurring 5 to 10% on the 14th using the bearish indicators. We saw the potential sell-off back here on the 29th, right there. Every time we had a 5% correction to 20% in this case. So we had a signal on the 29th, we had a signal on the 24th, and we had a signal on the 14th. Every one of those produced 5 to 10% corrections. We did not get a 5 to 10% correction here. Okay. We did not see the VIX going backwardation. We did not see the VIX. We saw the VIX spike, but we did not see what? We did not see the 3-month to 1-month VIX drop below 1. All right, how do I set up the chart? So it's just a pairs ratio. So let me go. Let's do DVOL and DVOL and UVOL. So $sign DVOL, you got to see above 9, right, to get you to your 90%. DVOL and UVOL. So what I do is the composite symbol and this yellow line is a pairs ratio. So you just go edit studies here, you scroll down, and you just add in something called a pairs ratio. It's bypassing, unfortunately, a mistake they made in creating symbols and using a / for the futures. But the pairs ratio is just right here. That's all it is. But if you want this style, I'll share it with you. So the thing is, you have to do a composite symbol. This is the composite symbol. And then it plots the addition, adding the symbols together, and then it gives you a ratio. But again, we only got to 2.5, right? I know we just didn't get very high on Friday. So if we're thinking about today's movement, yes, we saw some hedges, right? Yes, we saw the VIX pop a little bit. They were buying puts to hedge themselves, right? To reduce exposure. Great. We talked about doing ahead of it by virtue of doing what? Buying puts and selling calls on Monday. So right there, we talked about buying puts and selling calls. This is the hedge that we talked about putting on, and this would be for 100K. I shared with you how to be able to put in the stuff so you could figure out, your exposure. We talked about taking profits and high beta names. So again, this is kind of representative high beta S&P 500 names. That went from 105 to 98. It dropped 8% in 3 days. Came off and we're up today. I expect this is going to go a lot deeper, right? I would expect that this is going to go a lot deeper before we're all said and done, right? But if I were to come down here and to my my fib drawing tools and say, okay, well, how much we expect this thing to drop? 90? I guess so. Yeah, we'll support a 95, but 90 to 80. Well, how much of a decline is that? I'm going to roll this back in here. I'm going to go to my my trend lines, click on the high, drop to 80. That's a 25% decline. Yeah, I think it'd be very, very easy for high beta to go 25%. And the S&P is only going to drop about 10. S&P goes 20, high beta names are going to drop 25%. Okay. And so the idea is that SPLV, It's up today, down 0.9, down very little on Friday. So if I take this is my short squeeze indicator plus SPLV. So I take these two, we had a little bit of breakout on Friday to the downside, right? We're rotating out of high beta. It's not stopping today, trying to go back to some of those stocks again, right? There is an attempt. AEO, big call option activity in AEO today. Buying the 1250s, buying the 14s. There's some spreads in there, 13, 14s being bought. I mean, they're trying to push AEO. Got their commercials, right? So, I mean, a lot of this, they're trying to create momentum in names like AEO, Big Bear AI, a lot of activity there. It's up 12%. It's not like they're not trying. They're going back to the trough. Okay. And I may go to the trough this week with Peloton, right? I like this setup. I love the short interest. I love the days to cover over 5%. This is a lot like Rocket Mortgage, not quite as much. We closed out on Friday for 150% in one day. So I'm looking for something like that on Peloton. We closed out GDX this morning for over 60%. So I'm feeling pretty. We had a chance to close out a number of trades on Friday. So we had 5 trades we've closed out in the last 2 days because of the movement. Okay. Actually, 4 trades we've closed in the last 2 days because of the movement in the market. We're able to get out of TLT profitably. We're able to get out of IWM profitably. And then we got some kickers with XLF. I mean, this was up over 90% on Friday, but we were shooting for 100 and we we're looking to sell this spread, bought it for 50 cents, $3 wide. I'm looking for this thing to get down towards 49. We're shooting to close it for $1.80, buying it for 50, closing it for $1.80. We're trying to get some stretch goals here with some of these trades. And I get it. We're nervous. The market's up today. You start to question, but is it possible to put on some bullish trades? Say, sure. I'm looking at several today, and I just showed you all the ones I'm looking at that may have the potential for a short squeeze. I'm probably only taking one of them though. I'm dialing back the risk on the bullish side. I may have to get there. I may be behind. We're loaded for bear on the bearish side. We cut a couple of bearish positions, but if we see more selling here, we're going to be in a great position in ghost prints. But if we start to go the other way, we close out GDX today. We don't got a whole lot in terms of bullish. We got to circle around back and start to get bullish again. But I'm not there yet, right? I'm not there in terms of the broader market, but we're going to have to take some swings potentially. It's the cost of admission. When the market's selling, you got to look for some opportunities to buy. Was it enough selling on Friday to start to look at that? Yeah, there is. And that's why we're looking at option activity, right? We're looking for ghost prints. And that's why on Wednesday, we're going to show you the scanner. I've showed you a little bit before, but it's going to give you an opportunity to isolate and find where the pressure is in the market, right? We're trying to find where the pressure is. We're trying to find high value targets that the retail trades may have a chance of really creating some squeeze. Okay. Look for a setup. Sure. Yeah. I mean, is it a terrible opportunity for a setup? Okay. So let's talk about a bearish trade today. What about XLU? What about XLU? So I just showed you, I don't think the market's done. I do not have a crystal ball. I do have a system that is pretty good at identifying major market bottoms. However, it may be one and done. The timing, the seasonality of the market gets really difficult for the next little over a month and a half. What about going bearish in XLU? What do you think of that? What do you think about going bearish XLU? We just talked about the fact that the market did not see a lot of breadth in its selling on Friday. When we talk about capitulation, doesn't breadth need to be part of that picture? So what is capitulation? Capitulation. Oops. How would you define capitulation? So I've shown me mine, show me yours. How do you define capitulation in the market? What do you think? I mean, if we're going to go long here, I mean, we want to see some capitulation. Bad breath. Okay. So I just showed you a couple of breadth indicators, right? 90% days. So these use advanced decline. We're just breaking them into components, the ECN plus $ADVN. Now, if you have your own breadth indicator, share it with us. That'd be awesome. So I'm going to load study. Say again, we're going to go to pairs ratio again. This is what? This is advanced decline. Declining and advancing. Why are we doing declining first? Because we're down. If we're looking for a 90% up day, we would change the order of these symbols, but we only got to a little over 2. Fear spike in the VIX. Did we get the fear spike in the VIX? Okay, throwing the towel. But how do we? So again, I think you're in a really good point, right? We're talking about panic selling. We're talking about bad breath, throwing in the towel, fear spike in the VIX. What is your definition for those things? You don't have to put it in there, right? I love the fact, I love where you're going with what you're saying because you're right. But what do we want to do? We want to quantify it, right? We want to quantify it. We want to quantify it. So what I'm trying to help you with today is quantifying all of those factors, right? Quantifying all of those factors. VIX above the Keltner, right? I was messaging everyone like, oh, my internet went down. All right. Sorry. Breaking up. Yeah. Shoot. Yeah. Sorry. My internet went down. So is everything good right now? Yeah. The return. Yes. Better. Okay. Good. All right. Sorry about that. My internet crashed and then it came back up again. So hopefully we hopefully got 10 minutes left before I think Blake's coming on next. So the idea is we want to see capitulation. Now here's the deal though. Don, if you listen to Don has another word for capitulation. Does anyone know what it is? When Don talks about breadth, advanced decline, what's Don's word for it? Does anyone know what's Don's word for capitulation? Iguana? Nope, not quite. He calls it correlation, right? He's talking about correlation. So when we go, let's go to the market watch tab here. We'll go to visualize. We'll change that to index watch. We'll select the S&P 100. He's looking for a degree of correlation right here. 80 up, 20 down. Crap fest. Yeah. Puking. Yeah. Those are, yeah. So, but correlation, meaning that if we flip this around, we might have a degree of correlation. Okay. If we had 80 down, 20 up, we might have a degree of correlation. Now, here's the deal. When I show you this in here, DCN, $ADVN, this would give you even a bigger perspective of correlation. Oops. In that we're talking about the entire New York Stock Exchange, right? Versus the S&P 100. But this is in short, This is one way. Sorry, we got a market watch here. This is one way to see it. We see 20 up, 80 down. That's the degree of correlation. So if we need to see correlation to indicate a market bottom, what does that give us in terms of XLU? So if we need to see correlation in order to achieve capitulation, lots of shuns here. What does that mean for XLU and trading a spread on it? Trading a bearish spread on it. What does that mean? This has to, I call it catching down, right? This is going to have to catch down, right? Doesn't it? If the market's going to make another leg lower, we need to see correlation, capitulation, etc. Doesn't utilities have to sell here? Don't we have to see some degree of selling in utilities? Now, in the Ghost Prince console, I'm going to go through on Wednesday with Dawn, okay? And to be honest, I mean, this is not a cheap thing to just hand out, okay? And so as a function, you're going to have a limited time opportunity, and we're going to go through that on Wednesday, okay? The company that's developing it, I mean, again, this is not a cheap tool, okay? But XLU today. So XLU, so I sent this out this morning on the 15 AUG. So I'm going to show you here. We're going to 15 AUG. We're looking over here, okay? We're looking over here on XLU. Long puts right there at 86.50. All right, so let's go down and take a look at it. So we scroll down here, got option time sales, and you'll see we'll go to right here, 5,500, 15 AUG, 82 puts, 5,500 contracts, bought in one print. Okay, one trade, 82 puts, 15 AUG. So go back up here, 15 AUG. Notice that what? Oh, sorry, looking at the wrong one here. 86.50, 2,299. Okay, bought in one print at 83 cents. 83 cents is 4 cents off the ask. And on the console, it'll actually see where it's filling in between. We'll take a snapshot once we cross 2,000 contracts. So anyway, we go back to 86.50 here for 15 AUG. Should probably look at my spreadsheet instead of going by memory here. But right here, 86.50. 5,000 contracts traded quickly. 2,300 bought in one print. And so again, we're buying puts on XLU today. And that's a decent sized trade. 5,000 contracts going for about 85 cents. That isn't 2,200 in one print. This is not a retail trader, right? These are institutional size trades. Okay. And so we have very big activity today in XLU on the bearish side. Is this potentially a hedge? Sure. Does it matter? The answer is no. We start to drift below 86.50, we're going to have the same effect, whether it was a hedge or it was a speculative trade. But I find it interesting that XLU is pumping today. We're up 1.5%. We failed to achieve any capitulation on Friday in terms of breadth. And we're really not there in terms of volatility, telling us we're at a real low here. We can always find a low and go higher, right? Nothing's 100%. GLD's up today, about 0.5%, was up on Friday. You know, I'm looking at this getting back to 316.50. We were able to close out our GDX today because we made a big move, touching our prior high. That was our target. We're out 60% gain on it. I've only had it a little less than 2 weeks left on it, but great. We came close to getting it there, but we got it here. No, we came close to getting it there, but we got it here. But the idea is we kind of waited out a little bit. We're in the range. We touched the top end. We got some positive theta. We went in the money and we're there, home free. But XLU, to me, this is one that's got to go down. And what could be a precipitating factor for the market selling off? Or could it be bonds getting sold? Today in LQD, let me share. So again, another Ghost Prince console. So again, going through Ghost Prince console, LQD today. It's a 21 Nova expiration. It's out here a little ways. 5,000 puts right here, buying the 109, selling the 103s. Okay. That's a decent sized trade again. Decent sized trade, buying the 109, selling the 103s. It's about 80 some odd cents, 5,000 contracts. You do the math. And it's in one print, I believe, too. Trying to remember back, but it's in one print. Yeah. Boom, boom, right there. 19 sub 105 is 19,000. So let's like 19 sub. That could be a closing order, but let's see 19,000 here. Yeah. So that's closing it out. Those are short puts that they're buying to close. That would not come on the console because volume is less than open interest. They're closing it out. So that would not come to the console. That will come up on the console and it'll have a spread tag on it. Okay. But again, 5,000 contracts. Again, we have what? Downside looking at 103, which is down here. Again, all of the activity that I kind of found this morning was like, we're taking speculative bets on high short interest stocks. But if we look at high beta, low volatility, we're seeing a bit of a turn on Friday. That trade's cracking a little bit. I may take another one. We got a couple going. We're going to have to hold lift through earnings and see if we can get a recovery move, which if they come out a little bit positive, this could easily gap up in here. They've got earnings coming up on the 5th, 6th after the market close. So I'm hopeful we can get a pop up in this area, get close to break even, shut it down. But the idea is that I kind of like XLU as a bearish trade. How would you trade it? The more this pumps, the more I like it, to be honest. And we'll bring up the expected move study set, auto expected move. And again, well, that's a defensive stock. Yes, it is defensive, but guess what? Options price in the lower volatility too. We come out here to SEP. We got till 19 September. You look at the 86, it's about a 38 delta. Notice the skew. You can buy 15, sell 16 and a half. Buy deep and wide, 1 month, 2 strike vertical. You're paying 50 cents on a $2 wide spread. On a $2 wide spread, 86 is right about there. 84 is down here. 86, 84. And guess what? We don't need that to get to 84. Why are we selling 84 then? Because there's premium there to sell. And heaven forbid, if we get lucky and the market just sells off hard, we might have a chance of realizing maybe we could get 60%, sell that for $1.20, and then you're making 70 cents on 50, 75 cents on 50. But otherwise, we're looking to sell that for about a 70% gain. So 0.5, come on, try to bring up my calculator here. So 0.5 times 1.7. You could get out of that for 85 cents. But to be honest, if we could shoot for $1.20 on a big move, that's a cheap spread because of the high skew. And again, all we're looking for is a degree of capitulation, right? Utilities coming back in. And utilities can come back in even if the market goes higher. All we need is bonds to sell off. Bonds sell off, market gets a little iffy, but it goes higher. We could easily see a little bit of selling here in XLU. Anyway, so again, that's one that's kind of setting up an XLU. We talked about Peloton, but Blake, have we capitulated?
You're fighting me. We're going to war. You want to go to war, Balake? Oh yeah, we went long XLU on Thursday.
Yeah, but that was a good point to go long, right?
Yeah, I'm
but
sticking
this
to
is
it.
just saying, hey, in the next 60 days, can we? 50 days,
sure.
50 days, can we get to 85?
Yes.
84 and a half.
I can't bail. I can't bail on my current one because it's good. So
no, but that's the point though, is that we don't need XLU to crash.
Right.
But my thought process, if the market's got a bottom, XLU's got to sell here, kind of capitulate with the broader market. And there's some big prints on XLU today.
Yeah. Well, I will stick to mine until it's done, but I can see what you're getting at. I think the pricing's good. So,
but it doesn't change the overall trend, right?
No. Exactly.
And it doesn't have to. All right. Well, I'll fade away, Blake, and I'll let you
fade away.
Hear, see no evil, hear no evil.
Yeah, very good. Where were they at? Weren't they San Diego Zoo? I think they're San Diego Zoo.
Oh, I don't know.